Okay, so let us start a new topic today. TDS, tax deducted at source. Now, what is this TDS, tax deducted at source? You must be remembering this concept from your Income Tax Act knowledge. Under Income Tax Act also, there is a concept of TDS, which says that before giving payment to any person, so many times payer is required to deduct some portion from that payment. If I am working with any company, and for example, my salary is 2 lakh rupees, before the company gives me 2 lakh rupees, some percentage of 2 lakh is required to be deducted by the company on my behalf as tax, and the company will deposit that amount with the government of India directly. So I get the amount which is not 2 lakh completely, it will be 2 lakh minus tax on my behalf deducted by my company. Of course, when I will file my return of income under Income Tax Act, I can claim that tax deducted as the benefit, and I will pay the difference amount of tax only. With this concept of this TDS used under Income Tax Act, GST also incorporated this concept, TDS, Section 51 of the CGST Act 2017. Now, what this concept is in as far as GST is concerned, how do we use the concept of TDS in case of GST? Now, suppose I have purchased product or goods, for example. Suppose Delhi University has purchased 2 lakh worth of goods from any supplier. Then, before making the payment of 5 lakh rupees to the concerned supplier, Delhi government has to deduct some tax at source. At what rate? It is 1% in case of intrastate supply, 1% central tax, and 1% state tax. In IGST, it is what? 2%. So in central tax, in case of intrastate supply, the TDS rate is 1% central tax, 1% state tax or UT, Union Territory tax, as the case may be. Since Delhi is treated as state under GST laws, so in case of Delhi, what will happen? My example was, if Delhi government has purchased, for example, furniture, some iron furniture of 5 lakh rupees from a company which is in manufacturing of that furniture. So that company has supplied 5 lakh worth of furniture to Delhi University. Now Delhi University, before giving the payment of 5 lakh rupees to that company, has to deduct tax at 1% or 2%. It depends whether it is intrastate sale or whether it is interstate. This is the concept of TDS. Of course, that company in future, when that company will file the GST return, that company can say that the tax, some tax has already been paid by that company through Delhi University. The obligation of Delhi government was only to deduct tax at source and deposit that amount with the government of India. In reality, that deducted amount will be treated as tax paid by the supplier of goods or services or not, or both. This is the concept of TDS. Let me share a screen discussing the concept of TDS. But before discussing that screen, let me show you the original CGST Act, which gives you an idea that how it is written in the original act. So let me share a screen having CGST Act. Now you can see this screen, section 51. What is the heading of section 51? Tax deduction at source. So there is only one section which we have to cover, and our topic of TDS will be complete. It is only section 51. How many subsections are there in 51? Subsection 1, 2, 3, 4, 5, 6, 7, 8. That's it. So there are around 8 subsections of section 51, and the topic of TDS will be complete. Now I will show you the simplified version of this TDS, which I have written in my own language, and it is in my book. But in reality, you must know that every author has taken the knowledge of section 51 as the TDS knowledge. Or everywhere where you will find this TDS concept, it has been taken from CGST Act section 51. So let me tell you what is, in simplified language, what is this CGST Act all about as far as TDS is concerned. Now this is the new screen. Chapter 11, tax deduction at source and tax collection. For the time being, I'm not discussing tax collection at source. I'm not discussing TCS. I'm discussing TDS. Now see this. TDS section 51. I hope it is visible to you. Is the screen clearly visible to you? Hurry up, kindly reply fast. Is the screen clearly visible? Okay, great. So this is what TDS section 51. Now let me discuss with you the provisions. So my first subheading of TDS, who are those people who are legally required to deduct tax at source? It's not that every recipient is required to deduct tax at source. In my example, I gave you the example when Delhi University was the recipient of goods and one company was the supplier of goods. Now, logically, who will be the deductor? Deductor will be the person who has to pay. Now, who pays? Who purchases something? So that means who are deductors? Who purchases goods or services or both? So at the time of making payment to the suppliers, they will act as deductors. But this will not possible. This is not required in all the cases of purchase and sale. Only in some exceptional cases there is TDS obligation. So what are those cases? So my subheading is deductors who are required to deduct tax at source. Now you can read this point. The following persons. So not every purchaser, only these purchasers are required to deduct tax at source from the payment which they will make to their suppliers. But the condition is what? The total value of such supply must be exceeding 2,50,000. So if I am purchasing something till 2,50,000 rupees as a recipient of goods or services or both, I am not required to deduct any tax at source. Only when the total value of supply exceeds 2,50,000, then only I am required. Now who am I? Only these people. Only these people, not everyone. Now if as an individual, tomorrow I go in any showroom and purchasing worth rupees 3 lakh rupees, though my value of supply exceeds 2,50,000, but I will not be required to deduct tax at source, because every purchaser is not required to deduct tax at source even if the total value exceeds 2,50,000. Only these purchasers are required to deduct tax at source if the total value of supply exceeds 2,50,000. So you have to learn these. Any department or establishment of central government, any department of state government, local authority, like in Delhi the local authority is MCD, DDA is the local authority, government agencies, or any authority, any board which has been established by an act of parliament with 51% or more participation of the government. Similarly, any authority established by any state government where the state government is having 51% at least participation. All the societies of the government and all public sector undertakings. If these are the purchasers and if the total value of their purchasing exceeds 2,50,000, these are legally required under section 51 of the CGST Act that before making payment to the supplier of goods or services, they have to deduct 1% in case of intra-state supply as central tax, plus 1% state tax or union territory tax as the case may be. Further, if the supply is interstate, then these purchasers, for now I can start saying that these purchasers are deductors. They have to deduct 2% as IGST. This is my first subheading of TDS, that who are the deductors. So if in the exam the question comes that who are liable to deduct tax at source, this is the answer. These are the persons, and if their total value exceeds 2,50,000, these are legally required to deduct tax at source before making any payment to their suppliers. Now who is deductor? Now you can understand it. The person who makes the payment. That who makes the payment? Who receive the goods or services. And the supplier is deductive, to whom the payment is made. So who is deductor? The recipient of goods. And who is the supplier? Deducting technically is the supplier. Now this is the rate of TDS. Central tax 1%, and by default when I am using the word central tax, by default there will be state tax oblique union territory tax at the same rate. And how much is integrated tax? Interstate 2%. This is my first discussion of TDS. Now second heading, in some cases TDS is not applicable. Now these are those cases. Non-applicability of the provision of TDS. So there are around 5 cases where TDS provisions are not applicable, even if the deductors are government agencies, public sector undertakings, because the provision is not at all applicable. So now first that provision is, if supply takes place from one public undertaking to another public sector undertaking. Now public sector undertakings are deductors, like ONGC is a deductor. Bharat Heavy Electricals Limited is a deductor. Bhilai Steel Power Plant is a deductor. So if any supply happens between two public sector undertakings, though both are deductors, there is no need to make any TDS. No need to deduct any tax at source. First point. Second, not only public sector undertakings. Second says when any supply takes place between any of the deductor with another deductor. So whatever deductors we have discussed in the earlier point, whenever any supply takes place between two deductors, TDS provisions are not required. Where payment is made, I will skip some points. I'm not discussing each and every point which is written in the book. Where payment is made by the Ministry of Defense, except these 4 authorities. Even within Ministry of Defense, there are hundreds of authorities, hundreds of their branches, which are known by different name. Ministry is always very huge, but beneath the ministry, there are so many authorities of that ministry. Now within Ministry of Defense, there are hundreds of branches, but except these 4, in these 4 TDS is required. When payment is made by these 4 authorities of Ministry of Defense, these authorities are under obligation to deduct tax at source. But other than these 4 authorities, whenever Ministry of Defense makes any payment, even if the value exceeds 2,50,000, that authority of Ministry of Defense is not required to deduct tax at source. But these 4 ministries, these 4 authorities of Ministry of Defense are under an obligation to deduct tax at source. That is what I have discussed, other than the following. So whenever payment is made by any authority of Ministry of Defense other than these authorities, TDS is required, otherwise no. Whenever payment is made by any authority of Ministry of Defense except these 4, TDS is not required. But when these 4 authorities of Ministry of Defense makes the payment, then TDS is required if the value of supply exceeds 2,50,000. Last point is a little bit technical but interesting. Where intrastate supplies is received by a deductor. Now, who is the deductor? Recipient of goods, because that recipient has to make the payment. So whenever any recipient has received any goods under intrastate, that means my supplier is also intrastate, from any unregistered supplier. So here the condition is what? That the supplier is unregistered and the supply is what? Intrastate. So whenever intrastate supply is received by these deductors, whenever intrastate supplies is received by these deductors from unregistered supplier. And one more condition, if the deductor is not liable to be registered, then TDS is not required. Again, coming back to that same example of Delhi University. Now, Delhi University is a deductor. If Delhi University has purchased the furniture from any unregistered supplier, from any small shop owner, small furniture shop owner, then Delhi University is not required to deduct tax at source. Again, listen. Again, read it. Where intrastate supplies of goods. Now in Delhi, Kirtinagar is an area where we have huge furniture market. Now, if Delhi University purchases, or for example, our college, Shriram College purchases furniture of rupees 3 lakh from any small shop owner who is in Kirtinagar, Delhi, then entire 3 lakh has to be paid by this college to that furniture shop owner. The condition is what? That furniture shop owner is an unregistered person. This is the condition. So intrastate, I have given the example of intrastate. Why? Because the recipient is also here and supplier is also here. Where intrastate supply is received by a deductor. In my example, who is the deductor? Delhi University. From any unregistered supplier. Who is the unregistered supplier? Any small shop owner in Kirtanagar area of Delhi. If the deductor is not liable to be registered. Suppose this deductor is not liable to be registered under CGST Act, except for the purpose of TDS. Now, Delhi University may not be liable to be registered under section 22. If you remember section 22, what is that section 22? If aggregate turnover exceeds 20 lakh or 40 lakh. But maybe Delhi University is liable to be registered for the purpose of what? Deduction of tax at source. So technically there are two types of registrations under GST laws. First, if my turnover exceeds the limit, I am liable for registration under section 22. But in some cases, even if my turnover doesn't exceed the limit, I am liable for registration, not for my sales, but for the purpose of deducting tax at source under section 51. Is the concept clear? There are two types of registration. In one case, who has to apply for registration? When the turnover exceeded some specified limits, or maybe some other cases of section 22 and section 24. Our registration compulsory sections are 22 and 24, where a person is compulsory liable for registration. These are section 22 as well as section 24. Now, if I do not become compulsory liable for registration under section 22 and 24, but I become liable for registration under section 51, just to fulfill my one obligation of deducting tax at source, because if I am not registered, I cannot deduct tax at source. So what is this point? Again, read it. It may be a little bit technical, but interesting also. Where intrastate supply is received by a deductor from any unregistered supplier. The condition is this recipient, who is the deductor, is unregistered person. Except for which purpose? Except for the purpose of deducting tax at source. That's it. You need some time to revise this point. Fifth, if you face any difficulty, then you can ask me later on. You have to read it yourself. So we have covered two sub concepts of TDS. who are the deductors who are compulsory liable, and second, the provisions where TDS is not at all applicable even if I am that deductor. Now next point, whatever tax I have deducted, I have to deposit it with the government. So what is the time limit of depositing that tax with the government? It is within 10 days after the end of the month in which deduction is made. So for example, I am a deductor. I purchased goods of 4 lakh rupees, and for example, it is interstate supply. So while making the payment, I will not pay 4 lakh rupees. How much tax I will deduct? 4 lakh into 2%. That means 8,000. This tax I have to deposit it with the government. So if I made the payment on 7th November, on 7th November 19, I made the payment after deducting 8,000 as tax. So till 10th December 2019, it is my duty to deposit this tax with the government of India 10 days after the end of the month in which I made the deduction. Next point, I have another obligation also. I have deducted the tax of which person? The person who has supplied me the goods or services or both. So I have to issue a certificate to this person. So it is what? Required certificate to the deducted. Who is the deductee? Whose tax is deducted? Who is the deductor? Who has deducted it? So to my supplier, I have to issue the required certificate in the required format. What is the time limit? Within 5 days of crediting to the government the amount of tax. So in my example, on 7th November 19, I deducted the tax of 8,000. I deposited this tax on 8th December. So 5 days will start from which date? Not from 8th, 9th. So 9, 10, 11, 12, 13. Till 13th, it is my duty to issue this certificate to the person whose payment I have reduced in the form of TDS. See this example. You read this illustration, and if you have any problem, you tell me. Through chat window, you can tell me, kindly read this illustration. Read this illustration, any problem, you tell me. Hurry up, reply fast through chat window. Any problem, you can deduct. You can tell me. Hurry up. Kindly reply fast. If you have not understood, you can reply. If you have understood, you can reply. Okay, let me proceed now. Next heading. Now it is my duty as a deductor that within 5 days from the date of deposit this amount with the government of India, I have to issue a certificate to my supplier whose payment I have deducted. But what if I don't issue this certificate within 5 days? Then I have to face the consequences and there will be penalty on me. The penalty is how much? If as a director you fail to furnish this certificate within 5 days, then how much is the penalty? Late fee 100 per day. So till I issue this certificate, 100 per day is the late penalty which I have to pay to the government of India. But one thing to be noted is that the maximum penalty or fee can never exceed how much? 5,000. So even if there is a delay of 3 months in issuing this certificate, the penalty will not be computed then on the number of days, because in 3 months, assuming 90 days, 100 per day becomes 9,000. But maximum fee will be 5,000. That's it. Next point. As a supplier, my tax was deducted. In my example, what example I have given you? 4 lakh was the payment and 2% was integrated tax. So 8,000 was deducted. Now this 8,000, supplier can claim this 8,000 as his tax. So this 8,000 will be reflected in the supplier's electronic cash ledger. Who is the deducted? Deducted is the supplier whose payment is reduced. He can claim this amount in electronic cash ledger. Automatically, whenever the amount will be deposited by the deductor, it will automatically be reflected in supplier's account. So I can use as a supplier my TDS for my own benefit. That will be in electronic cash ledger. Next point. As a deductor, it was my job to pay the amount deducted with the government maximum within 10 days from the end of the month in which deduction was made. So if I fail to pay the amount within 10 days, I have to pay interest also then at the rate of 18% per annum. This is the rate of interest if as a deductor I do not deposit the amount of TDS within 10 days from the end of the month in which the deduction was made, then I have to pay not only the amount of TDS as well as interest at the rate of 18% per annum on the amount which was not paid. Now read this illustration. It is only for explanation. Read this illustration. If you have any problem, you can ask me. It's only for self-study. Kindly read it. Within 2 minutes, you should read this illustration. And our concept TDS is over then. In the next lecture, we will start TCS. So kindly read this illustration and reply fast that you have understood this illustration or not. There is nothing to solve in this illustration. It is only a revision of the points which I have discussed in TDS. That how much will be the TDS, by which date TDS has to be deposited with the government by the deductor, how that amount can be used by the supplier, that means deducted. That's it. Hurry up, reply fast if you have any problem. Any problem you can ask. The TDS concept is over from my side. Okay. So it's over. TDS is over. So in the next lecture, we will be starting the concept of TCS. So I'll get back to you after some time.